India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. Today is the day. Today is D-Day in that sense, because later tonight, we will finally start to see voting data, actual data in terms of who's ahead, who's behind out of US elections coming through. By tomorrow morning, this time when we hit air, I think hopefully we'll have a clear idea who the next US president is going to be. So it's a big one that we've been sort of flagging for the last couple of months, but we are finally here. I'm Prashant. With me, my colleagues Nigel and Surbhi. Guys, good morning.
Hi, morning folks. Morning Prashant, morning Nigel. Even I thought, should we call it D-Day or call it like E-Day? Anyway, that's on a side note. But yeah, I think there's going to be plenty of action. This is the first major event, and then we have a couple of others in this week as well.
Well, that's right. It's all on the US, the elections, and then in fact we'll hear from the central bank as well. And our markets have been a little bit nervous. Let's see whether or not, the bulls want to go into the event strong, because otherwise, yesterday from the word go, we did see a lot of selling.
I think Nigel will probably be in a holding pattern today as well.
Which is not too bad.
Which is not too bad, absolutely. Hopefully we don't get another, I don't think we'll get another big
wave,
sell-off like what we saw yesterday. Yesterday was a little unanticipated. I thought we'd be probably in a range, but maybe we see that range today. So I think it's not just India, right? I mean, look at most global markets, a bit of a holding pattern. I think that's the best way to describe it till you get the big result. And guess what? You had, over the last few months, you've had polls, you've had betting markets, you've got early voting data, and so on and so forth. But are we any wiser? Nothing, zero, zilch. I mean, you're basically still down to a toss of a coin. It's that simple, 50-50 as you go into this election. So this is a pretty binary, one of the most binary kind of election results that we will get. It could swing either way with very little margin, very little separating the winner and the loser in terms of the actual vote count. So, as the world awaits the US election, we are, of course, I think, as I said, perhaps going to be in a bit of a wait and watch mode. By tomorrow morning, results should be out. By the time we are here talking to you and sort of getting you the next bazaar, I think we'll have the results come through. Now, last night, again in the US as well, not very much, slightly lower, about 0.25% down on the S&P, Nasdaq down about 0.33%. And by the way, volumes were a little lower, 15-20% lower on the on NYSE as compared to the yearly average. You look at the 10-year, which went up 10 basis points after, that is on Friday, after the jobs report. It almost gave up all of it, down about 9 basis points, about 4.29. Actually, what seems to be happening, and we flagged this off earlier as well, the market was priming for a Trump win. But I think as we've gotten closer and closer to the US election, you look at betting markets, for example, which were putting Trump ahead. Those have, in a way, all converged towards what the polling data is actually telling, the opinion polls, etc., are telling you. And they're not telling you much. It's actually down to the wire. So I think some of those trades have pulled back. Yields, for example, the dollar underperformed last night. Nothing big, but pulled back a little bit as well. Now, oil prices about 3% higher, but we already knew this during Asian trade. OPEC Plus has pushed back the December production increase by a month. There is, of course, also some commentary out of the Middle East in terms of geopolitical tensions, etc. So that is keeping oil prices slightly higher. Just to circle back the levels here, the Nifty, it tested the 5th August low, which is 23,893, and then rebounded from those levels. Yesterday, we closed above that. So that becomes important, 23,893, but that we're already practically there. We left off at almost 24,000, and this level is 23,900, so just about 100 points. I think that and then 23,700, it's a kind of equality level, which will be important. But the really big support, with some distance between where we are now and where we could head, is 23,620. What is that? That's the 40-week exponential moving average. So it's a slightly longer-term average. And it also, by the way, is the weekly lower Bollinger Band. That is 23620. Hopefully, we don't head to that. Resistance comes in at 24,230, which is the 40 hourly exponential. So it's a very near-term kind of marker above which I think some hope, people get a bit more hopeful, but you've got to cross some of these levels. For the Nifty Bank, it broke below its previous low, 51,318 yesterday. The trend line support for the Nifty Bank stands at 50,466. You basically, I mean, there are two big candles which we saw. You join the sort of lower end of that, you get to that number, 50,466. And that, by the way, is also the closest, a few percentage points away from where we left yesterday. The resistance comes in at the 20-day moving average, which is 51,508. Again, I mean, it's less than 1% away from where we stand. So this is the overall picture. If you're trading, you must trade. I think these are some of the markers to keep in mind. But I would say, as I said yesterday morning as well, stay out of the way with the big event, which is right in front of us. GIFT Nifty will give you an indication of how we are likely to start trading. It's down about 8 points or so. Surabhi.
Absolutely. I mean, it's going to be a tense, I think, next 12 to 24 hours. Still, the event is done and the outcome is before us, right? But yeah, a little piece of trivia, because typically the US market has always rallied post the election going into the end of the year. That's typically what's happened over the last two and a half decades. So if history is to repeat or rhyme, then maybe at least for the US market, things could be higher irrespective of the outcome. This morning, if you look at a lot of the Asian markets, there's positivity across our neighborhood, particularly the Chinese markets, the mainland market and the Hong Kong market. There's a lot of green on the screen over there. People have already started second-guessing what will be the outcome of the China parliamentary meeting, which is underway. Friday, we'll have the outcome. And there's been some chatter about how they're already talking about increasing the local government, the regional government debt limits, the debt ceilings. They'll be higher. So basically, they can go ahead and expand their balance sheet, the local governments, that is. So that continues to power some of the Chinese equities. There's one central bank decision in Asia today itself, which is the Reserve Bank of Australia. No rate change is expected. The other major one, obviously, is going to be later this week, which is the US Federal Reserve. And if you go by the CME Fed Watch tool, 99% probability of a 25 basis points rate cut. So that's how we are looking, as of now. The problem with our market yesterday was that we were a bit isolated in the fall. I mean, the rest of the world was quite okay. Many Asian markets closed positive. Europe was positive. So in that sense, it was a bit of an India-specific situation that was playing out. And we did break below the October consolidation zone for sure. The Nifty was trying that big recovery towards the end, but it is what it is. We're trading below the October low. So let's see if we can recover again. The critical question is that a lot of chartists have been calling for it, that there will be some sort of a test of maybe the 200-day moving average now, which is, still a lot lower. The zone would be around 23,350 to 23,450 thereabouts. So will that come into play over the next couple of sessions? That's something that the bulls will really keep a very, very close watch on. Fund flows, well, I don't have too much of good news to report. It's the same situation. More selling from foreign institutional investors. About 4,300 crores of selling came through yesterday. Domestic institutions are buying. But as you're seeing on several days now, not every day is domestic buying being able to entirely offset the FPI selling, which explains what's been going on in the market and the lower levels that we're tracking. Just a couple of numbers, and we'll tell you more in our top 10 segment. And we don't have too many, we don't have big outliers. ABB, a stock that's rallied so much on the whole capex move, the industrials move. There's a miss on ABB. Revenue is up 5%, which is below estimates. There's pressure on the margins as well. Look at Bata. Again, numbers slightly weak. There's margin pressure on Bata. Top line growth is very sluggish. 2-3% growth is what you've got year on year. KC is in line. We'll be speaking to the management as we go forward. By the way, watch out for BSE as well, because the NSE declared its numbers yesterday. And forget the P&L. The number that Vamakshi kind of singled out for us, which is a very interesting one, because if you look at the options segment, equity options, then the market share is actually dipping. And NSE's market share has moved down from 90.9 to 88.89 or 88.9 to be sort of precise. So is NSE's loss, BSE's gain? Will we see more of that trade play out? We'll find out. But some interesting stocks on the radar. But I think the larger question is, can the market halt the kind of slide that we were in yesterday?
Well, that's right. The bulls will like to go into the event, that's the US elections as well as the Fed. They like to defend yesterday's lows. So, they'll be looking to defend the recent lows that we have seen on the index itself. Today, we'll have the weekly expiry of the Nifty Financial Services Index as well. That's one of the last few expiries before we get back to the monthly expiry. So, that'll be another index that we'll be looking at. The VIX yesterday, it popped up all the way to around 17.6. By the end of the day, it closed closer to around 16.6. So you'll not want the VIX to go back to yesterday's high. You'll hope that in the near term, maybe it's made some sort of a high at around that 17.6 to around 18 odd. What about the FIs? Well, in yesterday's fall, actually, the FIs have gone ahead and increase their long positions, the clients, that is, beg your pardon. So you had the clients that had around 2 lakh long contracts. That's gone up to around 2.3 lakh contracts. What about the FIs? They were net short. Yesterday, they added close to 10,000 contracts on the short side as well. So both of them going in opposite direction. We'll have to see who gets it right. But more often than not, we have seen that recent evidence tells us that the clients have got it right. And yesterday, they added some long positions. Moving to the options data then, you had the PCR that's come down to around 0.85 odd. And you had a fair bit of writing in yesterday's trading session. The 24,000 call was very, very active, added more than 30 lakh shares. And there appears that could possibly be a strategy that plays out here, which is a short straddle. You write both the call as well as the put of the same strike. You pocket close to around 400 rupees. And you hope that the Nifty will move close to 2% in either which direction. And that's where, in fact, you'll see some of these contracts expire. These contracts, by the way, expire on Thursday. So keep an eye on that. So that's the range, right? On the downside, you're looking at the 23,550 mark. On the upside, around 24,450 mark. Yesterday's low is important. You don't want to breach that mark. The bulls will look to defend that mark. And the 200 EMA, which I was speaking about, comes in at around the 23,500 mark. That's the line in the sand. You don't want to see that mark getting taken out. Yes, you had a 200-point bump up on the Nifty Bank, and now it has the crucial resistance mark. So around 300 points higher, it's a 20 DMA, then you have the 50 as well as the 100. So that becomes, the crucial resistance zones for the Nifty Bank itself. 51,500 is an important mark. In trade, though trade was weak yesterday, you had SBI and PNB. They did quite well, particularly in the last 60 to around 90 minutes. So the PSU banking index will be something that I'll be keeping an eye on, particularly SBI ahead of its numbers. So keep an eye on that one. And we just got some data coming out of China. And that's what could excite some of those metal, steel related as well as iron ore related names, because the Chinese data that came out, out there, you have the Chinese National Steel PMI that rose by close to 5.6 points. So keep an eye on the metal index as well.
Okay, all right, got that, Nigel. So we'll keep a lot of those cues in mind and, of course, the levels as well. Let's start off then with the equity call of the morning. Jonathan Garner of Morgan Stanley continues to think defense is safer than offense in the current highly complex environment. He says U.S. policy scenarios for 2025 present downside risks. On balance for Asia and EM, he says China policy easing is important, but valuations have already re-rated substantially, and India remains their largest overweight.
All right, well, that's basically the view coming in from sort of closely watched global equity strategist.